There's been a lot of excitement in the markets this week, and to talk to me now about some of Citi's latest currency projections is Greg Anderson, Director of FX Strategy at Citi in New York. Well, Greg, where do I start? First, the surprise announcement of a Greek referendum, and now all this talk of Greek Prime Minister George Papandreou handing in his resignation. And of course, an unexpected rate cut by the ECB earlier on today. But first and foremost, what do you think of the decision by the ECB to cut the benchmark rate by 25 basis points? And of course, now what do you see happening to the euro-dollar in the short, mid and long term?
So I think the move to cut rates is probably a positive step, will be interpreted that way by markets, a sign that the ECB is broadening its mandate slightly, if you will. Even if they won't say it in words, they'll say it through actions that they're willing to cut rates even as inflation is above their target to support growth. However, I don't know that that's going to be enough to keep the euro from losing value in the midst of continued Greek tragedy, if you will. Our expectation is to see euro continue to move lower. We have a 3-month forecast of 131 and a 6-month forecast of 125, and sort of think that that's where we go before we can stabilize at some point next year.
Do you think we're going to see a continued flight to safety in the Scandinavian currencies because of intensified uncertainty in the Eurozone debt crisis? And how do you see a currency pair like the Euro-Norwegian kroner performing over the next year?
You know, the Scandinavian currencies are somewhat exposed on a trade front, not that exposed on a financial front to peripheral Eurozone countries. I think they will hold up well, and well compared to kind of the reactions earlier this year, where the Swedish krona was sort of like the high beta euro or whatever. So I think we'll see euro Swedish and euro NOK lower rather than higher as euro dollar moves lower.
And finally, let's touch on Japan's intervention in the currency market earlier on this week. How's this affected your forecast for the euro-yen?
You know, to be fair, we haven't altered our forecasts yet. When we look at them next, we'll probably just raise every forecast by 2 or 3 big figures, because that's what the intervention seemed to achieve. It does not appear that Japan will continually intervene to push the yen weaker, but we did see kind of a one-off intervention, and then I think Japan attempting to establish a floor in dollar yen. But I don't think that you know, that they will even attempt to push it beyond that. So, you know, we're looking for, with euro moving lower against the dollar, to see it also move lower against the yen, 98 in 3 months, and maybe, you know, I might shade that to 101. Based off the intervention, but on a longer horizon, still say we're going below 100.
Thank you very much, Greg. It was a pleasure speaking to you again. Next week we'll have more editions of Targets in Focus, as well as a special TV interview on G10 currencies. So plenty to look forward to. Goodbye for now.